Welcome everyone. We're just letting everyone in through the waiting room, so we'll get started very quickly. All right, so as always, we like to reward those who are on time, so we will get started. Thank you all for joining us again today for our webinar. I'm very excited that I don't have to come up with the content today. And it's that we've got a really interesting topic which all of us have probably had to deal with recently, and that's around obviously the AML and CTF stuff. So I'm not going to be the expert. I'm very lucky that we've got a lady today by the name of Louise Matthews who's joining us, whose role is Senior Risk and Compliance Legal Consultant at GRC Solutions. So, which is a leading provider of governance, risk, compliance, and financial crime e-learning, structured face-to-face training and consulting services. Louise specialises in the AML, CTF governance and regulatory compliance area, and she advises organisations across the financial services, legal, property, and professional services sector and assists clients to prepare for and respond to these regulatory changes, including the much-loved Tranche 2 AML CTF reforms. So hi Louise and welcome.
G'day. Hi Ashley, and hello everyone else.
So we'll jump straight into it, and before we get into any of the detail, if we'd like to just set the scene. So what's actually changed for I guess in our space and the people listening, for accountants and solicitors and insolvency practitioners with this new change?
Yeah, thanks, Ashley. I think Australia's regime is expanding, and it's expanded to cover certain services provided by professional advisors. So it's not just based on your title or what you do as a career. The trigger is whether the business provides a designated service with a link to Australia. So the first task for many firms is understanding your services and mapping those, identify what services are actually provided and which ones may be in scope. For accountants that are just dealing in tax returns and BAS returns, their work may be very different from those that are setting up companies or trusts or assisting businesses with sales or managing client money, for instance. So what is expected really a service by service assessment by AUSTRAC rather than broad assumptions being made. The key timing that we need to be aware of, though, is that this legislation has commenced. It has commenced from the 1st of July 2026 for professional services. Enrolment opened a way back on the 31st of March. But in general, you have to enrol within 28 days of providing services. So that means the cut-off date for enrolment is 29 July of this year.
Lovely week to go if you're not already planned for it. So. And that's just the enrolment, which I guess is the first step of it all, but we'll talk through that today. What would be the simplest way of describing what the objective of us having to be involved in this stuff now?
Yeah, AUSTRAC have stated they don't expect the industry that are coming into, the Tranche 2 people coming into the regime to be police officers. The objective is really to ensure that professional advisors have processes in place when they're providing services that are considered high risk, like creating structures, moving funds on behalf of clients, or helping to obscure ownership and legitimise transactions. They want processes in place to manage the risks that may be involved because those services can be exploited by criminals. So they're asking for a risk-based approach and to identify how these risks exist in each particular business and then apply proportionate controls and also keep records to show the decision trail and the rationale as to why you think some things are higher risk than others.
So a lot of people have heard about the Tranche 2 or the term Tranche 2, and I would imagine most of us have had to look into it, but it's still, in my mind, even someone who's had to get staff involved in all of this, it's still a little bit abstract. So if we can bring it back a little bit to practice, why is it that professional advisors are now being brought into this AML CTF sort of regime now?
Yeah, well, as I just hinted, professional advisors can sit and get involved in really high-risk activity of criminals. And that's because they're used to help establish structures, manage and move funds, advise on transactions, and also deal with ownership and control issues on a regular basis. So these reforms are designed to bring these gatekeeper services into this regime, and accordingly, we need to identify the risks and manage those risks with controls before these services can be misused. That's what AUSTRAC wants to see. From a global perspective, we have the global watchdog, which is known as the Financial Action Task Force, and they've long been focused on designated non-financial businesses and professions. And Australia's kind of been a little bit behind the eight ball in that regard. They've been recommending for years that we included these professions in the regime, and it's only just been recently that legislation amendments have happened. For accountants, examples may include a company with a corporate trustee or a discretionary trust being used to acquire property, or perhaps a business restructure before a sale, or instructions to move funds through a controlled account. So whilst these services alone can be quite legitimate and not suspicious in themselves, they do and can service criminals' objectives. And for that reason, AUSTRAC would like to know that they're being monitored, and if anything feels a bit off, that they're told about it. And if I could just talk about one particular case that sort of highlights this. It's an Australian case which involved Albanian drug and money laundering in Australia. So there was a syndicate that brought 30 kilograms of methamphetamine into Australia through a vehicle that was hidden in a shipping container that was shipped from the US. And it was through the business reporting, transaction threshold reports, but also suspicious matter reporting, that AUSTRAC got to find out about this particular syndicate. So one of the reports showed an offender sent some money over to the US to actually buy the car to bring the drugs into Australia, whilst another report showed the same offender and their family members receiving considerable amounts of cash from overseas about 2 months before the drugs were actually imported. And then more reports then came in about 140,000, and through a number of strange instalments, like something like 84 instalments, this amount of money was sent to other countries such as Albania, Norway, and Serbia, Turkey, and the US. So, and many of those instalments were deliberately structured to be below $10,000, that threshold, thinking that the criminals were thinking that those reports, being under the threshold, they would not be reported, those amounts. But because of the suspicious matter report obligations, AUSTRAC was informed that these particular transactions were suspicious, and they were able to join the dots and actually secure some convictions, not only in Australia, but also through their links with Interpol and other organisations overseas. So AUSTRAC's role really is not just a regulator of professions, to ensure we submit forms on time, or that we're doing the right thing. They actually are a law enforcement arm themselves, and they go after the bad guys.
Right. So it's a lot more than just looking at banking transactions and it just being a banking issue. Although obviously there was the transactions involved in that example you've just done, which I think is really interesting. I would never think twice if a client wanted to buy a car from the US. I mean, I know a bunch of people have bought cars from Japan when they're importing them. But so it's not just a banking issue anymore.
No, we've got to look deeper into issues, and that's why it's no longer just a banking issue. I mean, banks and financial institutions have been familiar with AML/CTF for quite some time now, but what AUSTRAC has found, and they've also been hounded by the FATF as well, is that criminals are getting smarter, and they're using professional advisors to actually obscure ownership of cash or control of the cash. And they're using really complex and quite interesting structures in order to, I guess, circumvent some of the reports that banks and other financial institutions are accustomed to making. So whilst a small accounting firm does not need bank scale transaction monitoring, AUSTRAC does expect that they're going to start receiving reports about things that don't look right. And they expect that professional services firms understand their clients and can pinpoint, who is the beneficial owner of a transaction or a company or a trust. And if it doesn't make sense, then escalate it and perhaps report it to AUSTRAC. So, yeah, it's way more than just simply a banking and transaction issue these days.
Right. Okay. So you've mentioned a couple of times about sort of looking at it's a risk-based thing and looking at you've made that comment a couple of times. I think all of us, there's a lot of risks that we try and mitigate in our firm, and accountants are always trying to mitigate risks. In AUSTRAC's language, what is risk-based that we need to be thinking about?
When they use the term risk-based, they're really saying that they want you to prioritise, look at the reality of the situation or the risk that exists, that could potentially exist as well. So when I'm speaking to a lot of firms, sometimes people go, "Oh, we've got all Australian individuals. We don't deal with overseas. We've known them a long time. It's quite low risk." But what AUSTRAC wants to see is a more deeper investigation into what potentially could be misused. What services could be misused. So they don't mean to apply the same process to every client or every matter, but they do want you to think about how could our firm's products, services, how our distribution channels work, and our clients, how could these things all add up together to create a larger amount of risk? So look at all those things. Look at designated services. Look at the types of clients that walk through your door. Look at how you do business with people. Are you dealing online? That creates risk, and jurisdictions as well. So if you're dealing in particular jurisdictions, unfortunately, certain countries don't have the strength of AML, CTF regimes that we do. And unfortunately, they don't always have a stable government or perhaps, some of the other laws that would protect. So for these countries, they're higher risk merely by being in a particular jurisdiction. For a small accounting practice, this means distinguishing ordinary annual tax work and things that wouldn't normally be caught by the AML CTF from other services that you may provide, like company formation, trust restructuring, business sale assistance, or account control services. Those types of activities are risky, and therefore AUSTRAC wants to see how you're going to control those activities from being exploited.
Right. So I'm hoping this isn't the case, but there will no doubt be advisors out there that have really well, I'll give you my example is that us as a firm, I did the AUSTRAC questionnaire back in January or February, and it said that we weren't going to get caught. So we thought, oh, good, we've done all the right things. And then a couple of months later, we looked at it again and went, oh, damn, we are going to get caught. So there will be people who are late to the party, I guess, for this sort of thing. Given that, is it still, is it a staged approach, or if they're not ready by next Friday or whatever it is, are they done? So can they sort of stage their way into this process?
Yeah, I think my answer to that is yes and no. I mean, you can look at this in a staged approach, and that's probably a very logical way to approach it. But we are at a point where enrolment, which is an obligation, is looming. So I'd start with practically scoping whether or not your services are being caught under Table 6 of the Act. And we'll talk about some of the designated services in more detail in a sec, but decide what is caught and then decide whether or not you should be enrolled, because that is your first obligation to meet. So a sensible first week for an accounting practice would be to list your services out that you've provided over the last 12 months, for instance. So have you been doing company, corporations, trust establishments? Are you working with self-managed super funds where trustee changes might occur? That kind of thing. And then test whether or not they're going to be captured. Then use a staged approach to logically come up with, well, okay, let's do a risk assessment, let's get a policy and some procedures in place. But I guess the very first thing you should be worried about is enrolling in time if you are captured.
Okay, so and that's I think the 29th we said is, what's that? Let me have a look here. That's next Wednesday.
Yeah,
so
it's coming fast.
Coming up very, very fast. Okay, so practically, if a firm has a look at this and then goes, oh no, I'm going to be outside of it, or they don't check and they go, I already know I'm out, what's the risk for a professional firm that doesn't get on top of this?
Well, I think the first thing is that it creates pressure on firms to quickly catch up, because when you find out after the fact that you should have been compliant and you haven't been, everyone is a mad scramble to actually fix the situation. And when you start under that kind of approach, generally speaking, if things are happening at pace and not without the right thought processes behind it, they won't be done well. And that's what AUSTRAC's looking for, is that you are actually putting a sufficient amount of thought and rationale into some of the decisions that are being made, and that will flow from a risk assessment and naturally flow into policies and workflows. They really want to see that this is going to work in reality, and that you are able to reduce the risk of people exploiting your services for the wrong means. So they're less inclined to be worried about how it looks, in terms of how pretty it looks and how long the document is and does it have all the bells and whistles. But they will want to know that the staff know what they're doing, know when to escalate things. There are policies for onboarding clients. There are policies for escalating when something feels off. People know what the red flags are. They really want to know that there are some practical things being done within your business to reduce the risk of money laundering.
Okay. So when we look at AUSTRAC and what the new Tranche do, what do we, sorry, let me start again. So what is AUSTRAC expecting from Tranche 2 from the earliest part of a new business? So we've all signed up, we've signed up earlier and we're ready to go, and we're 23 days in and we're meant to be doing stuff. What would AUSTRAC be expecting if they came and knocked on my door today?
Yeah. Well, you need to evidence you've had genuine effort, right? So the first thing you'd want to show them is your risk assessment. You've enrolled. The next thing that should be on your priority list is appointing the right people into roles. So having an AML compliance officer and perhaps a senior manager, and in sole practitioner businesses, it's one and the same person. But really then undertaking a proper risk assessment. So mapping out all your services, clients, jurisdictions, distribution channels, thinking about the ways that your business could be abused or exploited for the wrong reasons by criminals. And then how are you going to sort of quash that kind of activity? How are you going to sort of beat them, I suppose, in what they're trying to do if they should come through your door? So document not only the risks, but the controls, and make sure the controls are measurable, but also able to be reviewed, and that you're tweaking them down the track. AUSTRAC has really emphasised they don't expect perfection at the start. They understand that people are getting their heads around this, especially the new Tranche 2 professional services. But what they don't want are off-the-shelf products that don't fit your business. They want to see that you've thought about your business and that you've got sensible things in place to thwart the criminals.
But we're supposedly not meant to be police. So what should firms know about enrolment details and keeping AUSTRAC informed? Like, what should people know about that part of it?
Well, I guess enrolment might seem like an administrative step, and in some way it is, because you've got to go onto the online portal and you've got to enrol by a set period of time, which sounds very administrative. But also, it's not a one-off step. So people should keep in mind that as things change, and if you've appointed an AML compliance officer, then that person is the liaison point. And that's what enrolment is all about, is making them the liaison point with AUSTRAC. So if anything changes either to roles or something major within, like your services that you provide, for instance, say there's a merger of firms and suddenly you're creating companies and trusts for people as a service offering, or would that be a change? And AUSTRAC would generally want to know about that within about 14 days of it happening. So there needs to be someone that has their finger on the pulse and isn't just appointed with a title, but understands they are the voice of the firm to AUSTRAC and vice versa.
Okay. So I want to jump ahead a little bit to one of your point 12, and just talk a little bit. You mentioned something about designated services. So can you sort of break down a lot more about, because that's obviously a really critical part about what's involved in this. So talk to us about designated services.
Yeah, well, the way the Act is set out is that there are a series of tables in Section 6 of the Act, and Table 6 is the one that is relevant here. Table 6 is aimed at all the professional services, and what it does is it lists out all the categories of services that the regulator, but also the government and the legislators think are actually high-risk AML, CTF, proliferation financing activities Austrac would want to know about. So those types of activities are listed, and they will help you understand whether or not you're caught by the obligations. That's how it brings people into the legislative regime. So the main categories include assisting to plan or execute transactions involving real estate or a company or a legal arrangement. So that assisting word is important, and we might come to that a bit later. But also they include receiving, holding or controlling or managing money or accounts, securities, virtual assets or other properties in connection with a transaction. So some that thought they may not have been caught because they're doing bookkeeping functions. If you're receiving, holding or controlling money in any way, that might bring you into the regime. Other categories include assisting with equity or debt financing or refinancing, or selling or transferring a shelf company, they're listed, and also creating or restructuring a company, trust or other legal arrangement. These are the services that are listed. Another one is also including to act or arranging for someone to act as a director, a secretary, a partner or a trustee or a nominee shareholder or some sort of equivalent role. And the last one is providing a registered office or principal place of business address. That will also bring you under the obligations.
I think there's going to be a lot of accountants who are not want to do hold the registers in file anymore with the amount of paperwork that comes.
Yeah.
You mentioned assisting, and I think this is for everyone listening, and even for myself.
Mm-hmm.
We all are involved in assisting our clients. From we assist we do the tax returns, we do the financial statements, but the directors are still responsible for signing them off. Where does Austrac fit in what is assisting compared to actually doing? It seems like we're being caught in something that all we're doing is providing advice on.
Yeah, assisting is a word that's been carefully looked at, and I've been looking at advice and guidance on the Law Society, New South Wales Law Society website as well on this, because it affects a lot of people. It matters because many professional services don't actually always involve the advisor being the principal to the transaction. So what does it mean? Well, it means if you're helping to plan or arrange to execute a transaction. So things like preparing financial records probably wouldn't be an assisting, but if you're assisting setting up a company structure, or if you're assisting a real estate transaction in any way, like preparing documents to get that transaction over the line to execution, then that's really what we're talking about here. It would also include any kind of control over money or assets connected with the transaction. So the better question to ask, I guess, is, did the professional service that you're providing help carry out the relevant transaction or arrangement? So did it sort of advance it in any way? And I think you can delineate that from just general advice or preparation of documents. It's got to be in relation to a transaction that would be subject to money laundering.
So I think the fact that it's subject to money laundering probably takes it out. But if you look at a bookkeeper who, helps do payroll, and they might set up the ABA file and they upload it to the bank, and then someone approves that, the decision of is that in or is that out, how would a company manage that? Because I know there's a lot of bookkeepers on who do a lot of that type of work. And if you're going to say, no, that's not a designated service, how does the bookkeeper protect themselves?
Well, I think what they need to do, it is a line drawing exercise, no doubt about it. Ordinary bookkeeping or payroll where someone else is making the decision at the client end, I wouldn't ordinarily think that is within scope. But the position changes if the accountant or the bookkeeper has delegated authority to operate the client's accounts, or initiate or approve transfers, for instance, or decide over an account where bills are paid and when they're paid, or move money between those accounts. That's the kind of thing that would be within scope. Regardless, when you're looking at these decisions, regardless of which side of the line you fall on, it's really important that even if you're saying, no, we're not actually getting involved in any delegation of authority here, we're just preparing documents which the client approves, it's really important, if you form the decision that you're not within scope, that you provide the rationale. So you can show Austrac that you've actually thought about, you've turned your mind to it, you've thought about whether or not you're in scope. on this particular service. You've decided that you're not, and the reasons why. And that will protect you because it will show AUSTRAC that you just haven't thought about it at all. You have a record of, no, we've looked at it, we've assessed it, we're not within scope.
And if we just run that through for lawyers as well, what should they be doing to, again, protect themselves around those decisions?
Yeah, well, the same logic applies. It will depend on the service, right? So, and not just the title that you give to the service or the title that you give to the person performing that service. So, you should really look at any kind of service that involves client money, property or business transactions, company and trust formation, again, restructuring, anything where you're acting on behalf of these types of transactions. And you shouldn't really assume just because something is out of scope simply because it does not see itself, like the firm doesn't see itself as a financial services business. So you really need to look at those designated services and understand that Table 6 within the Act. And if you are helping to buy or sell a business or establish or restructure a company or trust, or advising on complex ownership structures where you're actually advancing the transaction to ownership, those kind of things would definitely be within scope. So again, I'd say just provide your rationale as to why or why not you think it is a designated service.
Okay. All right. And I did ask beforehand for the same thing for insolvency practitioners. So a couple of notes on those guys.
Yeah, so it's often distressed businesses can involve really unusual asset movements, and we know that they've got opaque ownership, and sometimes they deal with related party dealings, and and there's always urgency in those transactions as well because of the pressure involved. So I think the question remains whether the practitioner is providing a designated service. That's the first question. And then the risk assessment should recognise that, the insolvency work that is going on will produce red flags sometimes. And so therefore a greater degree of inquiry and control may need to be at play here. And issues may need to be escalated to the compliance officer and perhaps even reported to AUSTRAC. So to give you an example, I'd be looking out for things like unusual asset movements just before appointment or related party transfers, managing or realising assets where the ownership is unclear, and anything that involves any kind of obscurity of the ownership of the structure you're dealing with. So where these things don't align with what you know about the client or what you've seen in the transaction records, the question then remains that should this be escalated and should it be recorded and reported if necessary?
Yeah, it's certainly an interesting space when you're looking at doing some of the restructures that we do. I'm going to jump a little bit again to point 18 and just talk about the geographic link. So part of your original discussion is about that's linked to Australia. Can you just talk a little bit more about where that ties in?
Sure. So for most firms on the call today, you're operating a business out of Australia, there's a link to Australia. So if the service is being provided from Australia or a relevant transaction or arrangement has an Australian connection, it will have the required geographic link to be under the scope of the legislation. So firms with offshore clients and cross-border structures or overseas counterparties really should not be assuming that international side of their business is outside the regime, because the fact that business is sitting within Australia is enough to be a geographical link.
Okay, and it's my own business. So, if I've got clients that are based in the UK and I'm still doing work for them, but the fact that my business is in Australia is the link, not their business.
Correct. Yeah. So you can't assume because you're doing a matter overseas that you're not covered if you're operating the business here.
Yeah. Wow. Okay. So let's talk about existing clients. So we've got, I know we're 23 days in. All of us have got a list of clients a mile long that are current clients of ours. Do we need to do a whole back roll process now with every client that we've got on our database?
Oh, look, I'd say no, but what you will need to do is prioritise which clients you'll need to re-verify. And you could do that logically. So AUSTRAC is not that their guidance is not that you need to transition all of your existing clients over to this new regime with pre-commencement customers. But what they are saying is identify which clients already are in your existing business involving designated services. So that's one group you'd start to prioritise, right, at commencement, and then subcategorise those clients into those that are probably very low risk. So the individual client, with no overseas connections that you've met face-to-face and previously verified, they'd be very low risk. But then you'd look at other things like what the client is now asking you to do. So if a client now asks you to create a trust or establish a company, then they might move up the rank of priorities in terms of verifying your existing client base. So it really does depend on how you want to approach it, but there are ways to do it that you're not doing your entire database at one time. So as services come through the door or are requested, and also based on the risk of the client themselves.
At some point, you've got to go through the list and go high, low, and work your way through. Yeah. All right. So we might jump a little bit into the obligations and implementation a little bit.
Yeah, no
So
worries.
once a firm works out that they're likely to be captured, what's the main obligation it needs to prepare for in the first instance?
Well, the first one I'm going to say is enroll. It is an obligation. If you miss it, you're non-compliant. It's a binary thing, strict liability for that. So once you've enrolled, though, you need to develop a program, and the only way you can do that is by going through a really meaningful risk assessment. So your risk assessment will detail in a document exactly where your risks lie within the business, and then it will also document the controls that you are going to put in place to mitigate those risks, to reduce them. And then from that, you'll have a program. So those controls will start forming workflows and policies and procedures. They may be controls about how we're going to onboard customers. What kind of checks are we going to do to verify identity? How do we know if we're dealing with a politically exposed person or someone that's on the sanctions list? There needs to be work procedures around those particular elements. That's your customer due diligence in a nutshell. And then monitor, how are you going to monitor for suspicious activities? How are you going to tell your staff what is a suspicious activity or a red flag? So what training do you need? All of that will form part of your program. And then also you'll need policies and procedures about reporting to AUSTRAC, and how that needs to occur within your organisation so that you're compliant, what timeframes are needed, and of course, what records need to be kept, which often gets overlooked, but it's really, really important. So I think that's mostly that in a nutshell, but obviously that's going to take time to build out, but it all starts from the risk assessment.
Well, and look, we keep talking about the risk assessment and that whole due diligence of unpacking what a customer is. So can we maybe jump into that, like the risk assessment of a client? What are we looking for? What are we dealing with there?
Yeah, okay. So it's really about knowing who the person is or who the entity is and understanding whether that relationship makes sense. So you'll need to identify and verify customers, and you probably do that already, but you also need to understand the beneficial ownership and control of trusts and companies. And then you need to consider higher risk factors. So like, what jurisdiction are they in? What are they asking you to do? Is there urgency? How are they behaving in front of you when you start to probe into some of the questions you'll need to understand the transaction, such as where has their wealth come from, or how are they funding the transaction? Are they evasive? Are they non-forthcoming in providing some of this information? All of that will form a picture of the client and forms part of your customer due diligence process. And of course, then you'll need a process to help your staff, I guess, navigate through that process itself and know when they need to escalate it up the chain and have some management decisions as to whether or not you're going to continue doing business if something feels a little off.
So, I mean, it's a minefield if you ask me, a lot of this stuff, but I guess a lot of the time it's going to be, okay, they're borrowing the money from the bank, it's nice and easy, happy days, move on, but in some cases it's not.
Yeah. Yeah, so it's about identifying obviously natural persons who ultimately own or control the customer, or the arrangement. So for a company, this can include shareholders and people who exercise control through their voting rights or appointments or some kind of other arrangement. So you probably want to have a look through to that. For trusts, it's really you need to look beyond the trustee. You need to look at who's controlling the trust ultimately. That includes the appointers, protectors, controllers. You really need to have a look at the trust deed to see who ultimately controls that and who can remove and appoint trustees.
Yep.
And like practical questions would be who ultimately benefits, like who controls the decisions, who's pulling the strings of the structure, and giving instructions and making things happen ultimately.
So I'm going to jump ahead again because
Yep.
we will run out of time. There's so much information that you could get into here. But if we look at sort of one of your points at 26,
Yep.
you talked about source of funds, how the wealth has been created, and now sometimes we get, you can get a gut feel about stuff, but talk to me about what we're doing there with the
Yeah,
source
so
of funds and.
yeah, bit of a confusion around this, but it's really simple. Source of funds is about money used for a transaction, whereas source of wealth is a bit broader. It's about how wealth has been accumulated over time. So for an accountant, source of funds might mean asking how a business acquisition is a deposit is being funded. So retained earnings, a bank loan, sale proceeds, that kind of thing. Source of wealth may be more relevant where the overall profile of the client doesn't match the transaction. So you've got a 26-year-old that's come in driving a Lamborghini and you don't know where their money has come from. So it may also be relevant where there's higher risk features such as, complex structures being involved, offshore entities, that kind of thing. And all of those things start to add up. So you just need to frame it from a due diligence perspective.
Okay. All right. Well, one of the things that I do want to jump to, and we mentioned this morning, is that with a lot of our clients, we're going to be asking them some really weird and more detailed questions than we may ever have done before.
Yes.
You mentioned that there was a document that Austrac's created because I think there's a new barrier that we don't want to create with clients as to why we're doing this. So you want to talk about that document?
Yeah,
The
well,
poster?
Austrac's produced a poster, a customer-facing poster, because it is going to be quite new for clients to suddenly be bombarded with a series of questions about their wealth or, how are you funding this transaction? They might find that a little bit odd or confronting. So Austrac have put together a poster to help explain, so to help people in the field explain to their customers that this is a change of law. This is how Australia is cracking down on money laundering. If you're not doing anything wrong, there's nothing to be worried about. But basically, this is a new legal requirement that all professions that are captured by the legislation need to ask their clients. And the whole purpose of it is to make our community safer and also protect the Australian economy from money laundering and crime.
That poster has been put in the chat group for anyone who would like to download it. Louise, we're well and truly going to be running out of time very soon, and there's a couple of, I guess, practical scenarios I want to run through.
Sure.
Before we get to that, you and I both know that there is a lot more that you wanted to cover today that we're not going to get to. Do you want to, out of that rest of that area, some stuff that you want to highlight for everyone? And just before you answer that, for anyone who's listening, if you have questions for Louisa, if you want to start putting them in the chat group or in the Q&A section, now's the time for you to start doing that, and we'll work our way through those after I'll let Louisa try and digest about 20 more points of information in 4 minutes.
Well, to sum it all up, I think, if I could give you 5 practical steps. First, just map your services against designated services. And secondly, identify which of your clients, matters and transaction types are actually higher risk than others. If you can start getting a hierarchy of risk, that will really help you prioritize and concentrate on what you need to do in terms of implementing programs and controls first. Obviously, you need to have appointed someone who's going to take control of your AML/CTF issues and be the voice to AUSTRAC. And that includes escalation and decision points, right? So, and fourthly, when you're designing your policies about onboarding and due diligence and record keeping processes, make them real, like make them so that staff can actually follow them, and then also monitor that that's actually happening. So what you don't want is a set of policies and procedures that look great and you think you've ticked a box, but then when AUSTRAC comes to call and they ask the question of your staff, no one knows what they are. So that's really important. Training and embedding this in with your staff is probably one of the most key factors here to compliance. So yeah, it's just really important that you embrace, there's no way around it. If you've got designated services, you've got to embrace the obligations, and you've got to do so in a way that it's actually meaningful for the businesses and the services that you're providing.
Okay, all right. I do have someone's hand up. So, Mark, I'll unmute you. I think I can do that, or you can unmute yourself, and let's jump into a question from you.
Hello, Louise. Thank you very much for your presentation. I got a lot out of that. Let me, sorry, put my hand down. Okay, so from my perspective, I'm a family lawyer,
Yes.
and we also do wills and estates sort of drafting for clients. My questions are related around accepting money, particularly for clients for small documents such as wills and powers of attorney, but also within the family law perspective, if we're receiving money from the sale of a house, or if someone's putting money into the conveyancer, how deep do I need to investigate to prove that the funds that the client has given me is legitimate? So if I'm telling a client, put $500 in trust to do a will, do I need to get a copy of their bank statement to prove that it came from them? And in relation to family law, do I inquire if the client is getting an application from a bank, do I need a copy of that application to prove the money is legitimate? Like, how deep do we need to investigate
Yes,
this?
I think you've got two parts to that question. The first is if
that's
you're
right,
merely
sorry.
operating a trust account as part of your business and things flow in and out to pay client services fees, I don't think that's captured. But if you're operating a trust account that's in relation to financial transactions of the client, such as depositing money for a real estate transaction, then you would need to verify the source of funds and source of wealth. You probably would want to for sizable amounts. You would do so on a risk priority basis, though. So you don't always have to go to that level of detail, but you may want to, depending on the risk factors the client is presenting to you with. So you may want to actually look at enhanced customer due diligence of that nature, depending on how you've risk assessed that type of client. I hope that answers your question.
Yes, it does. And if we're receiving money from a conveyancer, do I need to inquire with the conveyancer as to where they got that money from? How do I flow into that workspace as well?
Yeah, so reliance works to a point, but you do need to make the right investigative questions when you are receiving money of any kind. You need to understand this, where it's coming from and that it's been verified. So if you are going to rely on someone else verifying the transaction, it probably is a good idea that if you have regular relationships with people, that you would have contracts in place as well to protect you.
Okay, understood. Thank you.
Welcome.
Thanks, Mark. Really interesting question. We had a comment from one of our team saying that they're a bit worried about the AUSTRAC staff and whether they're going to be able to cope with the work volume. So no doubt AUSTRAC will not be prepared for as much as what may or may not come until it settles down.
Yeah, and I'll just give you an anecdote. I was talking to someone the other day in the financial services industry, and they got a rap on the knuckles for over-reporting. So I think there needs to be a balance between reporting everything and also reporting what you should be reporting. And that all, again, flows down to a meaningful risk assessment that's sensible and the right escalation points, but not just reporting everything so that you don't become non-compliant. That's not helpful either.
Yeah.
Yeah.
So we'll just run through, we've got a couple of minutes and maybe there might be another question pop up, but just a couple of scenarios, I guess. If you've got an accountant that's got a long-standing client, asked the firm to set up a new company and trust for a property acquisition.
Mm.
How far would the firm need to go to meet the this Tranche 2 requirements?
Yeah, well, a long-standing client doesn't a value of having to do your customer due diligence. What you could do is use that as a little bit of context as to how far you would need to go, but you would still at least need to verify once again their identity, and depending on how they present as how you've risk assessed them, based on their qualities and what you know about them. You may need to verify other things such as source of funds, source of wealth. And as I said, you'll use what you know already as context only, but it shouldn't be substituted as fact because things change as well. And things may have been presented to you that you think are actually factual, but in fact, they're not the case. So this is why with the switch on of professional services coming into this regime, it's like, I guess don't trust everything you hear or have seen before. It's a matter of time to now verify, and that's what they want.
Thank you. All right. We've just had another question pop up. If auctioneers and valuers caught under the Act?
Not unless you're providing a designated service. So it's not really what you do as a profession. It's how involved you get in bringing a transaction to fruition. So I don't think that merely acting as an auctioneer would necessarily bring you to, what was the other profession? Auctioneer and
valuers. So
valuers.
they would be used quite regularly.
Yeah.
I use the business to do valuations of plant and equipment so that we could then sell that to a new entity. Or if I've got surplus assets, I might direct my director to give those surplus assets to an auctioneer to sell off and turn into cash for us.
Yeah. Unless they're actually participating in that transaction, which is real estate, but other assets, no, I don't believe so. So unless they're captured by those specific services listed in Table 6 of Section 6 of the Act, then it's hard to say, but they would have to do that assessment and see how far their services go and could they possibly be captured.
I would thank you. I would suggest you might go and find Table 6 and do a bit of serious investigation, because I think getting caught late is probably more of a problem than anything else. Again, my staff seem to be giving more questions than anyone else, but when we train the staff, if we've got a designated person who becomes the expert in it, and then they train the staff, and AUSTRAC comes along, do we need to have formal evidence of those training sessions?
Yeah.
And does it need to be external, or can it be done in-house training?
No, it can be done in-house, but yes, you will need to show that you've covered the scope of what staff need to know. It needs to be role-based training. So you'd expect that, the staff in the front line would need to have training specifically on what red flags to look for in your business, when to escalate, that kind of thing, practical training. More senior people that are involved in perhaps being the AML compliance officer or the senior manager that's approving the program and approving whether or not to continue to do business with an entity, those people will need to know much more about the technical aspects of the Act and how to comply and what's expected of them in their roles. So it can of course be conducted internally, and of course you look to outside service providers as well to help you with that. There's a number of ways you could tackle that as well. So GRC Solutions, for instance, has e-learning. And the beauty of that is that the e-learning is a solid record of what the content was, but it also has an assessment at the end. So it shows, the uptake of the content as well. But then there's face-to-face training that probably should occur as well, especially when you're implementing something. And then, of course, there's monitoring and an assessment of that skill set and reviewing that training and refreshing it every so often as well.
Yeah, awesome. All right, well, I think we are pretty much out of time, so I'm going to flag to Stella to put up the poll so she can start that process, because it takes a little while for that to happen. And while I'm waiting for that to come through, I just wanted, Louise, thank you. It's a very daunting topic, and it can sound like where there's a whole lot of nightmarish things that we need to deal with, and that we have to work our way through. So, thank you for trying to make it as simple as you can. I know that there's a whole lot more. So, everyone listening, if you've got more questions, Louise's details will be put in the chat group, and it's Louise Matthews from GRC Solutions. So please feel she's offered to for you to touch base with her if you'd like to talk about anything more. It's an interesting topic, and I would love to have had more of the stories of some of the money laundering things that have been caught. And I love the story about the car being bought from the US full of drugs and the different the way they catch them. So. Although I'm sure we're not meant to all be police officers, in some way we're sort of getting there. So thank you very much. Really appreciate your time and effort that's gone into this. And everyone listening, please feel free to, Louise's details are there. I loved having you along, and no doubt we'll be talking again in the future.
Oh, that's fantastic, Ashley. And thanks everyone for attending today. I appreciate the time. Thank you.
Thank you, Louise.